Hey guys, real quick note. This is Brandon from Galaxydoc Market. Today is March 11, 2025, and it's Tuesday. It's about noon Eastern time as I bring you this. Guys, you got to be very, very careful. We're at this inflection point, and basically what I mean by that is that when you look at SPY right here, down here, we're basically this red dotted line is really the overhead resistance in basically a channel that we're chopping around at. If we start to break this 570 point, I mean not 550, 550.77, we are going to start flushing down, and there's not a lot of support until about 535 to 528. The reason why I'm worried about this market, as far as the market crashing, right now it's not a crash. This is a slow grind down. It is a correction. Okay, it's very orderly right now until it isn't. See all these green consolidation lines right here? Okay, we're actually below there, and we're going to chop around this area. And once it breaks, we're going to start targeting this 5,400 to 5,200 by the end of this week or sooner. Now, why am I so bearish? It's because the dollar has lost this 104.07. On my videos, I was talking about the 104.50 is basically an indication for stock markets to become very, very impulsive. And so that's what I'm talking about. And then, of course, the Federal Reserve Bank, really, their baby is this 10-year yield or 10-year treasury, right? The yield is inverse to the price of the bonds. And, they try to control this yield level down. And I think there is a cosmic battle going on, but Fed is losing the narrative. We have weak dollar, which is going to crash the market. And they're basically, let's be honest. The Federal Reserve Bank has been, through their proxy banks, buying stocks. And, when the 10-year treasury yield, anything above 38.50 is bad news for the banks. Okay, so when we have that, you're going to have banks that are basically completely insolvent. And whatever they're trying, okay, maybe this is all by design. I've been talking about that. The Fed maybe not be very interested in curtailing inflation. I do believe they were trying to hyperinflate out of this debt mess and then basically bring in a new monetary system under one world government currency, CBDCs, and I think that's falling flat on its head. However, when you look at the TNX right now, it is under pressure for the Fed. Fed does not want to see this yield go higher. And that's what's basically happening at the moment. Now, one thing you do want to look at is the fact that on this little pullback this morning, it's been like this every morning. Around 11 to 1:30, you're going to have a recovery attempt that's going to get sold off. And then maybe last 30 minutes of the market, you get a little bounce, and then it sucks in the dip buyers. And you do not want to be a dip buyer right now. VIX is basically holding steady. We're above 25, and we're at these levels. In order for any rally to materialize, I can't talk this morning, you have to get below this support level. Okay, so you take that for what you will. The other thing I wanted to comment, I'm very bullish on gold and silver, obviously. And gold and silver has been chopping around between these two dotted lines. And this is the range, okay? If gold stays above this on a closing basis, it's attempted a few times. It got near to these levels. It really hasn't been able to break out, but gold will. And same thing with silver. This level is super important, 33.228. If we can stay above there over the next few days, we're going to zoom right past, I believe, 35 and probably start targeting that 40 to 45 level shortly. Okay. And then, of course, we have Bitcoin that is under pressure. Okay. All the cryptos are. And this is kind of telling you that there's more pain ahead for the stock markets. Okay. Bitcoin has been trading side by side with NASDAQ. And we have all these stocks that basically are under pressure. But I wanted to kind of go over that. And one last thing I want to talk to you about is watch KRE here. Okay, KRE is a regional bank index, and I've been talking about KREs having major problems. And right now it's on a major downward trend. We did bounce right here, and I think we're going to probably tag that line and come right back down. Stocks we're looking at is Deutsche Bank, JP Morgan Chase, and of course Comerica. All right. I hope this helps. This is kind of the midday market update, and be careful out there.